If you're a trade and construction business owner turning more than $1 million per year and you don't know how much profit you should be making, then this video is for you, because in today's training, I'm going to be answering the age-old question that I get all the time, which is how much profit should I be making? Because it really is an important question that you need to know the answer to, not only to build a successful business, but also to make sure that you steer clear of running out of cash. Now, for those of you who don't know me, my name is Troy Larkham, client advisor at Trade Business Accountants, and we help trade and construction businesses turning $1 to $20 million a year to help them build greater security in their business and dramatically increase their profits and cash. So let's dive in. Now, before I actually answer the question of how much profit should you be making, it's important that I actually define what profit I'm actually talking about here, because in your business, there's largely three main profit types. They are gross profit, operating profit, and net profit. Now, the one that I'm going to be talking about today is operating profit, because operating profit, that's what's left over after your direct job costs, like your labor, your materials, equipment hire, and so on. And then also your overhead costs, which are your internal operational business costs like rent, accounting, subscriptions, all those costs that keep feeding away, even if work were to dry up today and you've still got to pay those costs. What you're left with after those two costs are factored in is your operating profit. And that's what we're in business for, because that's the amount of profit that's left over for you before you pay tax and interest. So that's the one we really want to be focusing on here, because everything before operating profit, your overhead costs, your direct job costs, these are all costs that are within your control as management. So what you're left over with at the end of the day from a profit and loss perspective is your operating profit. And that's what we're going to be focusing on. And operating profit is critical for your business, not only from a principal perspective of, you've invested blood, sweat, and tears into actually trying to build this business and produce operating profit. So you should be making a return in your business through operating profit, but also from a funding perspective. And what I mean by that is operating profit is a critical factor in producing cash for your business. And your business needs cash to fund itself. It needs real cash. Revenue and profit, they don't pay bills. They don't pay wages. Cash does. But operating profit is a key component in producing that cash. Now, if you want to learn more about that, I strongly recommend you look at a few of our other trainings on YouTube, where we break down in detail the 4 chapters of cash flow. And you'll see that operating profit is a major component of that. So again, operating profit is critical for your business. But the question is, how much operating profit do you actually need? Well, from what I've seen in most cases and typically across the industry, most trade businesses that are profitable achieve around a 5% operating profit margin. And while this might sound all well and good because they're actually making a profit, the reality is it isn't enough. Sure, from a profit and loss perspective, you're making 5% in operating profit, which might sound great. The problem is, like I was saying earlier, profit doesn't pay bills. Cash does. You need cash to fund the business. And unfortunately, your profit and loss and your operating profit doesn't really give you an indication of how much cash you've produced. Of course, it helps, like I was saying, in the 4 chapters side of things, which again, I recommend you watch some more training. But in terms of understanding, well, how much cash have I made? Your profit and loss doesn't tell you anything. And that's because profit is the result of your profit and loss, whereas cash is the result of your business. So while you may be making 5% as an operating profit margin, it doesn't mean you're making 5% in cash. And that's a really important distinction to make, because again, cash is what funds the business. But why doesn't your operating profit correlate to how much cash you've actually made? Well, it's because we're not factoring in the balance sheet. And on the balance sheet, there's some really important components there that have a real cash impact. Those include things like your accounts receivable, your accounts payable, your works in progress, your stock or inventory, your assets, and your debt. These are all influences of how much cash you make in your business, and they don't show up on your profit and loss. So you can actually be profitable, but still run out of cash, because you could have a 5% margin on the P&L, but if your balance sheet isn't effectively managed, then these components are going to be chewing away at your cash. And that's something that we see so often in the industry, and a reason why there's so many trade businesses out there that go under, even though they're profitable. They're running out of cash. And a big component here is actually the accounts receivable component, because a recent study from Xero actually found that on average, 5 to 15% of revenue goes uncollected every single year. So with that fact alone, it's probably wise to assume that if you're only making a 5% operating profit, then chances are you're probably only breaking even from a cash perspective, or even worse, you might be losing money if you're in the realm of 10 to 15% of revenue going uncollected every single year. Again, profit on paper does not mean cash in the bank. That's why we recommend you should be striving for an operating profit margin of greater than 10%. Because based off that Xero report, there's a strong chance that your actual break-even point likely sits somewhere between 5 and 10%, not 0%. Because again, we need to be looking at this from a cash perspective, because cash is what funds the business. Profit doesn't. That's why our focus needs to be on making sure that we are achieving an effective profit margin that actually ensures we're likely making the cash that we need. From what I've seen over the years, if you're achieving an operating profit of 5% or less, that means your business is likely close to or on life support, which isn't a good place to be in, because like you saw, 5 to 15% of revenue goes uncollected every year. If you're only at 5%, there's a good chance you are right on the threshold. Now, of course, if 15% is getting uncollected in your case, then you're going to be well past life support. You are going to be in a serious danger zone, because chances are your business isn't producing enough profit to counter the poor management of the receivable side of things in your business. Now, if you're achieving a 10% operating profit margin, that likely means you have an okay business. And that was what I was saying before. You want to realistically be striving for at least 10% as your operating profit margin if you're looking to just break even from a cash perspective. So again, that is an okay business. If you're achieving a margin of 15% or more in operating profit, that means you likely have a good business, because now you're in the realm of really starting to actually achieve some positive cash flow there, because you pass the cash break-even point. Any more cash beyond that is cash that is real, that is going to go into your bank account. It's positive. That's where we want to be sitting moving forward. And the last one, if you're greater than 20% in operating profit, that likely means you have a really, really strong business there. And this is something that we're always striving with our clients to try and achieve, because if you're making a 20% operating profit, there's a very, very strong chance that you are making some really, really great positive cash flow at the end of the day. And that's what business is all about. Again, cash funds the business, not profit. So it's important that you need to start striving for at least 10%. But if you can push it all the way to 20%, that's sensational. That's where you need to be, because that's where you actually start putting cash in the bank. Now, of course, the counter argument to this is, well, why don't you improve the receivable side of things? And I completely agree. But if you can maintain these margins, if you can maintain more than 15, 20% margin, and you can bring that, uncollected revenue below 5%, down to 1, 2, 3%, that's going to make all the difference, because you're going to have a really strong positive cash flow there. Now, if you've watched some of our other trainings on cash flow, you'll note that there's a lot more than just the receivable side of things. Like I showed before, there's works in progress, there's accounts payable, you've got your liabilities, there's all these other things that need to be factored in there that have a real impact on cash. But for simplicity and the sake of this training, these are some great targets to start striving for. 10%, you're breaking even. 20%, that's where you want to be, because that's where you're likely going to have a really strong business that's producing a lot of cash for you. So what this means is, if you've got a business that's doing $1 million in revenue, you really want to be at least 10% or more. So in this case, 10% is $100,000, because like I was saying, if you're only at 5% of revenue going uncollected, that's $50,000. That's half of your total operating profit, which is a huge impact on your operating profit and an even greater impact on your cash. But remember, like I was saying earlier, everything I've discussed here on the training is largely being based off 5% of revenue going uncollected. If you're at 15%, that is really, really pushing it, and your numbers are going to look very, very different. But in that case, rather than trying to push the margin really far north, what I recommend, like I was saying earlier, is you've got to work on the receivables. You've got to get that cash in the door, because the less cash you bring in, the harder you're making it for yourself to put points on the board. So again, get the cash in the door and focus on achieving an operating profit margin of more than 10%. If you do that, you're going to be well on track to making sure that you've got positive cash flow and a strong profit margin that's going to ensure you're making more cash than ever. You've got a moat around your business, and you've got that certainty and security moving forward that the large majority of business owners, unfortunately, do not have. All right, so that's everything I wanted to cover in today's session. And I hope from this quick training, you now have a better understanding of how much operating profit you should be aiming for to make sure you're actually making cash, not just profit on paper. Again, The benchmarks that I've set in this training are used to be as a rough guideline only because they are really dependent on how you're managing your receivables, your payables, your works in progress, and so on. All these factors that have a huge impact on cash. Now, if you'd like to go into more detail on setting targets that are specific to your business, then please reach out because we'd love to help. Also, be sure to like, follow, or subscribe for more training released every single week. Until then, I'll see you in the next one.